Mutual insurers posted modest surplus growth in 2017, despite higher than usual losses, according to an AM Best report. Joining us now to discuss the report is Kimberly Muccia, financial analyst. So Kimberly, how did mutual insurers manage to grow their surplus despite the challenging losses of 2017?
So 2017 saw increased cat activity. There were several hurricanes and wildfires, and the mutuals saw increase to both the home and auto lines in the pure loss ratio, which drove about $17 billion in net underwriting losses. But investment earnings more than offset that, which resulted in about $6.3 billion in net income. And there's really three components to the surplus growth. One is the net income. The second is the market had a very favorable run in 2017, which resulted in about 180% increase to the change in unrealized gains, or about $21 billion. And then the third thing was the U.S. tax reform was adopted in December of 2017. And that reduced the corporate tax rate from 35% to 21%. And companies reevaluated the net deferred tax assets or net deferred tax liabilities. Many of the mutuals reduced those net deferred tax assets, which subsequently lowered surplus levels of about $9.5 billion. So overall, with those three components, the mutual saw about a 6% increase to surplus, which still remains a very important performance metric for mutual companies.
So given the competitive marketplace, where can mutuals go to grow?
So growth continues to be experienced in auto lines. We see that even in 2018 as companies strive to achieve rate adequacy. There's still profitability pressures in the personal auto side, so a lot of the smaller carriers are sort of shifting from the personal auto into the small commercial side, small commercial property side. Aside from this, mutuals can look towards affiliations and partnerships to grow.
Do you expect to see more mergers and acquisitions going forward?
It's definitely a possibility. Mutuals have been doing affiliations for a number of years. It's a way to scale up. It's a way, for some cases, as a succession plan for smaller companies. Partnerships and affiliations are a great way to add to surplus, increase policyholder security, gain better access to technology platforms, expand geographically, or even the product mix. So as we mentioned before, competition is extremely heightened. The industry is sort of shifting to much more technological advances. We see an increase in insurtechs coming into the market, trying to compete for the same business as mutuals. So, a lot of the large carriers have sort of addressed this and embraced innovation, and then a lot of the small mutual companies sort of lag in this area and will need to either invest, which could be costly, or perhaps a partnership would prove beneficial down the line. And in the near future, maybe we would see an increase in merger activity.
Kimberly, thank you for speaking with us today.
Thank you.
To view the report, visit ambest.com. For AM Best TV, I'm Meg Green.